Okay, good afternoon, everyone. Thank you so much for taking the time, first off, and most important. We're going to do things a little bit different today, which I think will be fun. It'll also be most useful for you all to walk away with nuggets. So, what we're going to do that's a little different is we're going to save a little time, okay? And I know I say this a lot, but this time we are carving out the minutes to make sure that you can get your questions in. Okay, so here's what we're going to do. There's a Q&A box on the right-hand side. Usually you have a pane that you can expand or minimize. Just make sure it's expanded and you can type as we go. And it doesn't matter if it has to do with us or the carrier. Fire away, please. Feedback, questions, comments. We want to hear from you. And what we're going to do as soon as Jason wraps up, we're going to ask him some of the questions that are coming in, and then for the rest of you, because we literally have already about 400 to 500 agents on. So I don't know how many questions are going to come in, but obviously we can't take 4 hours answering questions. So we're going to pick a few, and then the rest of the questions will get answered as soon as we hang up today's call. If we need to circle back with Jason, we can do that as well, but do not worry. Every question will be answered. I can promise you that. So fire away. Also, at the end, make sure you're very familiar with that pane, that Q&A pane where you're typing, because we're going to ask our question of the day, and you have to type in the answer in that same box. So whoever answers first and correctly wins the new Amazon Fire 8 tablet plus the distribution solution prospecting book. Okay, so we're going to pick your name at the end. Make sure you type in the correct question, and you got to be quick because whoever's first wins. We announce the winner at the end of today's presentation. Okay, so what we're doing today a little bit different. Yes, we have a guest speaker on, one of our VPs from A-plus rated Columbus Life, and we have some very niche products, platforms, strategies, a premium finance platform that is amazing. In fact, we have a few different platforms we're going to touch on. And most important, we're not just going to sit here and talk about how great this IUL is and wouldn't it be great if you can land a premium finance case and make yourself $132,000 of commissions, because we all know that sounds great and it's wonderful. But the million-dollar question is, Bill, where do I get these prospects, right? I mean, it sounds great. I know enough to be dangerous, but I got to get someone on the phone that qualifies, right? That's the big ticket question. So we are going to show you where you can go to literally download a list of prospects that fit into this criteria in your backyard. So, and by the way, it's basically free. Okay, it's a volume discount price. Think of like Costco versus the neighborhood supermarket, okay, where these names are pennies on the dollar, literally, okay? Name, email, address, phone. We're going to show you exactly how to dive in. You can literally choose what the household income is. I mean, it's amazing. And if they bought or rented a house, I mean, it's really, really cool stuff, technology you probably haven't seen before. But I think the big point here is, yes, we're going to get you comfortable with this platform. And yes, we're going to show you how you can start talking to people today, this afternoon, literally. Okay, so great stuff to come. We're also going to share some awesome marketing material that you can start dripping out on your prospects, clients, your friends, your network, your neighbors. Okay, again, to spark the conversation. And by the way, you question this and you say, well, how do I even open the door to a consumer, to a prospect to talk about premium finance, right? And the big question is, well, Susie or Bobby, when you purchased your home, did you pay cash or did you take out a mortgage? And most people say, we took out a mortgage. Well, we're going to talk about doing the same for your life insurance policy. And boom, slam dunk, you open the door, and hopefully you'll get the sale if they qualify. So it's really, really cool stuff. And again, we have a few platforms with Levinson, and then, of course, Columbus has one of the best products for this strategy, in my opinion. So some really neat stuff. And think about this, too. You're talking about, you're at a cocktail party and you're trying to open the premium finance door, and you use that little hook, which is wonderful. And also, Bobby, Susie, do you have any children? Okay, and we know how that works, and we know what happens next. And oh yeah, let me tell you about little Jenny, and her first tooth just came out, and whatever, and blah blah blah. Well, this product comes with a free 1 year scholarship to any of our 430 plus colleges across the country. It's free. It doesn't cost you a penny. Okay, and this comes with it. In fact, it comes with any product from Columbus on top of 10 other companies that are in the program that we're going to show you today. So anyway, some really cool strategies. And at the end of the day, you need new ways to open doors. And that's what this is about. Okay, so it's not just pretty and shiny on the outside. We're going to show you how to get that $1 million door open. I think that's the name of the game. Okay, let's jump right in here, Andrew. We're going to move on to slide 2, just a few things I want to brush up on. So we just came out with, in fact, yesterday we launched it, the first and only, okay, it's never been done in the life insurance brokerage space before, the first and only interactive mobile app. It's a free download. We call this mobile app 2.0 here at Levinson because the first version wasn't even close to this. Okay, we sent out directions yesterday. We're also going to include directions so you can download this afternoon. Everyone will get a thank you email for attending today's webinar. Plus, we have some handouts from Jason. So we're going to include everything you need to get started, including contracting for Columbus as well. So everything you need to get started. The app is super cool. So it was designed, think about this. So you're at that cocktail party, you're having the conversation, right? And you open the door to term insurance, permanent, whatever the case is. And they say, Bill, this sounds interesting. I always thought life insurance was so expensive. And, actually, I can run a quote right now. Really? Yeah, pull out your phone, put in some basic information. You can run the quote, and if they say, wow, Bill, I can get a 30-year term, $1 million of coverage for $72 a month, where do I sign up? Well, I'll tell you right now. In fact, click the apply now, goes right to an iGo drop ticket or e-app, turn your phone around, boom, you just sold a policy at a cocktail party in less than 10 minutes from the Levinson mobile app on your Android or iPhone. Okay, literally start to finish. Everything you do from your desktop computer in your home office, you can do from your smartphone anywhere in the world, 24/7. Even check on your cases. Or if you get a great idea and you say, hey, I want to send out an e-blast on this premium finance strategy right now, pull out your phone, click CRM, everything's single sign-on, meaning you don't have to log in for every single button that you're looking at. Okay, 1, 2, 3, done. So there's no more writing down notes, doing it when you get home, putting your computer on. Everything happens from your smartphone. It is amazing. Okay, plus instant chat. You're going to love this. All right, let's move on. I'm so excited about it because we've been working on it for when the pandemic started. It's almost 2 years now. Okay, and finally we just launched it. So we're, again, very proud, very excited about this. And by the way, if you're a GA and you have agents under you that you're either recruiting or you service, whatever the case is, you should be talking about all of these tools and technology for your downline. Okay, and these are just sticking points, ways to keep that relationship fresh and to keep them writing under you, under Levinson, right? It's not rocket science. Okay, Levinson Expo back bigger than ever, talking about excitement. So I'll tell you what, it's been a few years where we have literally stood live on a stage in front of you all, and we are back, and it's only a couple months away, April 8th. I hope that all of you are registered and RSVP'd by now because we're filling up. There's over 300 RSVPs already. Please make sure to get that in before it closes out. Also, just remember this, free for all Levinson agents. And if you are writing at least $15,000, you get a free night at our beachfront resort. Starting at $50,000, we'll pay for round-trip airfare, plus a weekend stay at our beachfront location, right on the sand in South Florida. Okay? Doesn't matter if you're in Sacramento, California, we pay round-trip airfare and a weekend stay at our beachfront resort. So hopefully you got that premium in, life and annuity, by the way. Okay, so very important. Our keynote speaker is Mary Reed. Mary Reed came up with the distribution solution strategy, and what's so neat about her concept, number one, she talks all about tax saving strategies, retirement planning, and what's interesting, she uses an IUL for the younger, more aggressive client, and then she uses a whole life for maybe the more middle-aged, conservative clients, okay? And here's the best part. You say to me, Bill, I have a girl that would work perfect for this. Well, she will literally set up the appointment or the meeting with you and for you, okay, with you on the phone. She'll do all of the selling, the heavy lifting for you, make the sale for you, and you keep the bulk of the commission. So, I mean, it just comes down to having that network, knowing one person that fits, and she'll take it from there. And the average commissions are about $150,000 to $250,000 for one case. These are monsters. Okay, so anyway, she's going to be there live speaking for an hour. We're giving her book away. We're also giving her book away today to the winner. So it is going to be a game changer for Levinson Expos. I promise you that. A day full of sales ideas, strategies. All of our core carriers are going to be there presenting, and it's a day built around sales ideas that you can walk away from to start utilizing that weekend or that afternoon, literally. Okay, we're not going to sit here for an hour and speak about one company's financials and how great they are. No, these are strong, solid sales ideas. In fact, that was the criteria we told each presenter in order for them to be invited back. Okay, that's simple. Okay, let's move forward here. Make sure you register now. You can also do that from the Levinson mobile app or our website. Just a couple things I want to point out quickly, what's going on at Levinson. So a few things. And I'm not going to go over each bullet here, but top left corner, we just had the Super Bowl contest, and we had one winner that's going to be announced at the end of this month on Facebook. Okay, you had to pick the closest score and the winner, and of course, write, I believe it was 2 applications. So very simple. On the left, LSW sales contest. And then moving down, let's go to the Expo, bottom left side. So that's what I just touched on. Okay, so again, starting at $15,000, we pay for your room, okay, at our beachfront resort, and then again, $50,000 round trip airfare and a weekend stay at the beachfront location. Let's go to the middle section. I'm just going to touch on a few things here. So North American just announced the expansion of their non-med platform, offering up to $1 million. Ages 51 to 60. So they've widened that up, which is great. Prosperity's new term product, Instant Issue. We're one of the only agencies that are allowed to market this. There's only a handful. Okay, so we have one of the exclusive contracts. So we are launching this the first week of March. Street level comp, 115%. And the term rates are, I'm not going to say excellent, but they're very competitive. I'll leave it at that. But with that commission and instant approval, it's a win-win-win. Okay, not for everyone, but I'll tell you what, it's great, especially if you're focused on senior market, maybe their children or grandchildren, young professionals working with banks, associations, financial institutions. Great way to secure a loan or SBA loans even. So anyway, some great ideas built around that product. Let's go down to the middle column, last bullet there, new term life product, just approved for the Insure Me Now Direct platform. Why am I so excited about this? Because remember this, okay? You know Amazon. You know how Amazon changed retail shopping, okay? Well, Insure Me Now Direct changed the way that life insurance is bought, literally, for consumers, okay? This was just an idea. Now, today, we have over 5 carriers, over 16 products. Your client goes on your site, they literally run a quote, hit apply, get approved instantly, print and save the policy. You wake up in the morning, you're paid, and you're agent of record. Okay, by the way, you're not paid the next morning. It does take the typical 30 days. Okay, so obviously we have to go through free look, but you're agent of record and you get full commissions plus renewals on some products, just like as if you were face to face. So we have a new term life product that we are launching at the expo. Very excited about that. Plus, we're launching two new iGenius tools, one for electronic requirements and one underwriting assessment tool. Think of like X-ray, the underwriting tool we have. Think of X-ray on steroids. Okay, that is the new tool we are launching. So basically, three new pieces of technology that Levinson has exclusively. In fact, we built these platforms. So you can use this for recruiting, you can use this for marketing, selling, all the above, and it's another first and only at Levinson. Very proud of that. Right-hand side is the new 2.0 version mobile app. We have our new 411 life annuity updates video that you're going to see launched by the morning. Okay, so check that one out. It's about 10 minutes. Me, Andrew, and Ashley dive in, talk about all of the latest updates and changes. Just under that, our new final expense sales guide. That's like a owner's manual for agents selling final expense. It's like over 50 pages. It's everything you need to know when working senior market final expense. Social media tip of the month will be included in the thank you email. And then, of course, Carrie's Corner and the Bill Levinson Experience podcast coming out within the next week. So keep your eyes peeled for that. And let me also tell you, and I know I'm sitting here ranting, I'm talking a lot, I'm trying to get as much information in a short time. We do all of this stuff to help you, okay? The training, the podcasts, the interviews, these webinars, okay? At the end of the day, most of our competitors offer a contract and they say, hey, we're going to have the best commissions and we have the best service. And then when you need something, they give you the 800 phone number to the carrier, okay? We look at it just the opposite. Yes, we need to offer great customer service, products, commissions, of course, but we also need to have that value add platform that helps you all get your foot in the door. You all need to have a CRM tool. You need to have marketing pieces. You need to be able to open doors because let's face it, okay, you can have the best IUL in the world that pays 362% of commission, okay, but with no one to see and no one to talk to about this great IUL, it's going to do you no good. It's going to sit on a shelf and collect dust. So we look at it like, hey, let's take the majority of our overrides and profits and put it back into the sales platform to help our agents, okay, at the end of the day. And if we can do enough volume, right, then it all evens out. And that's exactly what has happened since 1972, okay? There's no secret to this. It's really that simple. All right, anyway, let's move forward. That's just the main point why we have all of this great technology. It's not for everyone. We get it, okay, but we need to have a little bit of everything, right, for all types of agents. It's that simple in every city in the U.S. Okay, top IUL carriers. So if you notice the red and green asterisk. So the red asterisk means scholarship approved. That means you sell a product with this carrier. And boom, your client just got a 1-year free tuition, $40,000 of value scholarship, okay? So the green asterisk means we have an IUL sales presentation system, okay? It's basically software that allows you to sit down with your consumer and it literally spells out why IUL is a smart choice, especially in this market, what we're seeing, even today. Okay, I mean, it's horrible, but the war going on, what's going on with the market, there's a lot of movement right now, and I feel like with IUL, it's a safe bet. It's a locked-in life insurance policy with a cash accumulation account typically tied to the S&P. It's a no-brainer for younger professionals with kids, with families. So anyway, you need to get your arms wrapped around this. So again, these are our core carriers. And if you notice, top right corner, Columbus Life, our go-to, Sage approved. That's what you're going to hear today. Okay, let's jump right in. Okay, without further ado, we have Mr. Jason Graham, our RVP at Columbus Life with a hell of a story to tell. Just make sure you're taking down notes and walking away with nuggets. Jason, you there, buddy?
I am, Bill. Do you hear me just fine?
Yep, perfect. Actually,
right,
much
good.
better.
All right, good. Glad to hear that. First off, thank you again for this opportunity to speak with you and with Andrew and the rest of the group. This first time this year, second time in 6 months, so I really appreciate it, and really appreciate all the business that you guys have done with Columbus Life in 2021, and we're very excited about 2022 and what that holds for us. So I really appreciate all your time, and we're going to touch on a couple of things that I know we are seeing a great deal of movement in the marketplace, and talk a little bit about how our products kind of fit into that, and obviously what Bill has been talking about. These types of cases tend to be fairly large in size, and obviously commission is obviously at the top of mind, but they're also very complex as too. So there's a little bit of a longer cycle when it comes to these. So, partnering up with Bill and Andrew to, learn more about that, but also working with carriers that can handle this type of business like Columbus Life is going to be very, very important to you. So we're going to touch a little bit about our program a little bit and how we work. We're going to just follow this agenda to the T. So, we're going to take a look at our guidelines. We do actually have a pre-approved checklist that for anybody that has a case that they're working on that is potentially a premium financing case that you can include with the application, and really spells out all that we need and what needs to be submitted in for us for review. Then we're just going to do a little bit of review. I know we, last year we did a call talking a little bit about our IUL products, but I really want to identify some of the features on our IUL products that are really specific and are utilized in premium financing cases that we see. The next thing we're going to talk about is nothing new. I'm not new to this strategy. I actually learned about the strategy a couple of carriers ago, but this is a great strategy for cases, particularly on the survivorship universal life side, for premium financing and as well as for non-premium financing cases. So we'll talk a little bit about that and how that works. And then finally, this is actually fresh off the press. This particular case study was actually closed yesterday, in the tune of, the target premium on that was about 132. Actually, it was 132,000 in target. I don't know if Bill was kind of spying on me when he threw out that commission number early on in the call. But we're going to talk a little bit about this case because it wasn't as easy of a go around, but in the end we got the solution that we want, and by you working with us and our underwriters and so forth, we were able to make it happen. So without further ado, let's talk a little bit about premium financing and touch on some of the things that we're looking for with an agent that is looking to do premium financing business with us, and just be very transparent in terms of what we're looking for in terms of the type of clients and so forth. Just to give you a backdrop, last year was kind of like our first year getting back into premium financing, and we had a goal, we had a range that we didn't want to get past in terms of the amount of total business that we were going to take in, and we were under that goal, which was good because I know there were some other carriers that actually shut down earlier towards the end of the year last year, and we're not taking any more business. So from a Columbus Life standpoint, we're really do not want to take no more than 15 or 20% of what our goal for the year in premium financing, which is very in line with most of the other carriers that are out there. So just wanted to keep that in mind as well too. So let's touch a little bit about what products, what's the guidelines in terms of who may be eligible to do premium financing with us. And for those that may be new to the concept of premium financing, it's just another way to pay premiums on a life insurance contract. You deal with, particularly high net worth individuals, high income individuals that have their money tied up elsewhere where they're getting a great deal amount of return, whether it's in their business or investments, whatever that may be. So trying to get them to have them sell off their assets or take a little bit of their income away to fund life insurance policy isn't, they understand the whole idea of leverage and lost opportunity costs. And, part of, where we are in the world right now with low interest rates being the way they are, the high net worth people really are gravitating to this more and more because they're basically borrowing at very low rates, and that makes sense for them. And when you're coupled that with an index universal life product, there is obviously some leveraging opportunity that can take place on there. So that's kind of like the nuts and bolts of it. There's plenty of different sophisticated ways of going about doing this, which we are very in the box. We only want traditional premium financing cases. Anything that's kind of out of the ordinary, we'll take a look at, but we're going to stick to that. So talking about our guidelines, our product availability, it says all fixed permanent products. I will tell you, it's mainly going to be our individual IUL product and our survivorship IUL product. As you can see, the age ranges that are available between the ages of 25 and 69. Minimum net worth of 5 million and minimum annual income of 250,000. There is an approval process for a producer. So if a producer has come on with us to do business with us and wants to do premium financing, there is a vetting process that we want to make sure that you understand how premium financing works. What is your typical design structure, what sort of lenders or who you're using from a lending standpoint. So there is a little bit of an approval process on there, but once that's in place, you're good to go in terms of submitting this type of business with us as well. So let's talk a little bit about the case design. So typically, from a financial underwriting standpoint, everything's got to conform to what our current financial underwriting guidelines are. And I believe Bill and Andrew have a copy of our underwriting guidelines, and you'll be able to see what those financial underwriting guidelines are. We do not allow MECs, nor do we allow policies that are owned by charities. And most carriers out there, from a premium financing standpoint, do not allow policies to be owned by a charity. In terms of U.S. citizenship, the borrower and the insured must be a U.S. citizen or permanent green card holder, and the policy has to be in stasis here in the United States. I actually had a case that closed a couple of weeks ago where the individuals were dual citizenship with the U.S. and with Israel, and the policy was stasis in the state of Pennsylvania. So all those things have to kind of play into that, from a citizenship standpoint. Full recourse is required. Big one that's kind of come up quite a bit, because I know some carriers allow this, but most carriers don't. We do not allow the accrual of loan interest on the loan. We would like anything else with premium financing, it's all about skin in the game. So we want to make sure that the client understands that there is some skin in the game on that, and one of those things is the loan interest and paying that loan interest each month, each year. So that's important. Ownership of the policy has to be personally owned or owned on a personal trust, like an ILIT. And we'll talk about one of the sales strategies that I mentioned on the survivorship standby trust, where this could be an opportunity where you can leverage that as well too. Transfer of ownership or beneficial interest in policy. Obviously, with still kind of feeling the effects of Stoli and Iul, we're being very, very prohibitive in situations like that. And so we typically are not looking for cases that they're going to be doing that at some point down the road. And then finally, the policy has to be collateralized with us. They can use the lender's collateral assignment, or they can use our collateral assignment form to basically assign the policy to that debt while the loan is still outstanding. Talk a little bit about the lenders. Like I mentioned to you before, we already have about 5 or 6 lenders that we approve of already. Wintrust, Bank Direct, PacWest, to name a few, and there's like 3 or 4 others. I can't remember off the top of my head. So if there is a lender that you are working with that does premium financing and we have not vented them out, we do need to take a look at the loan documents and the structure of the company, and making sure that it is a viable company that we feel comfortable with. It has to be a U.S. based lender, can't deal with anybody that's overseas. It has to be fully underwritten, full recourse. This next one, the loan exit strategy, and a lot of carriers are starting to do this, is that they want to see an exit strategy independent of the insured's death, meaning the death benefit will take care of the loan on the loan that's outstanding with the lenders. So a lot of times carriers will allow you to show an exit strategy using the cash value, whether you take a withdrawal or a loan against the policy, or other assets that they may have outside of the policy that is going to be able to service or pay off that debt at some point down the road. So these are some things that you need to keep in mind with work with lenders. And before I go on any further, Bill and Andrew have a copy of everything that I'm showing to you in a digital format, so they'll be glad to pass those along if you have any additional questions and so forth. So, and then finally, this is the checklist. Again, you'll have access to this list. I have provided it to Bill and Andrew, but this is something that we would need with regards to when you're submitting the application. It helps with the flow and understanding, the makeup of this case, how it looks, so it's part of the process that's going to make things a little bit easier with regards to submitting premium financing business with us. And again, if you run into any questions or concern, please direct them to Bill and Andrew, and they will, get in contact with me to make sure that we're doing everything accordingly and so forth. So, so that's it about our premium financing in a nutshell. Hopefully that gives you kind of a good idea about what our guidelines are, what are the procedures, what are we looking for, the type of business that we're looking for, and kind of going from there. So let's touch on a little bit about, with our index products, what sort of features that I want you to identify in terms of, when you're considering cases, regardless of it with us or anybody else. These features I see quite a bit, and there's a reason for that as well too. So I'm going to start off first with our individual IUL product, our Index Explorer Plus, and you'll see where the green arrow's at is where these kind of come into play, particularly when it comes to premium financing. One thing I like to highlight is our guaranteed persistency bonus. So regardless of whatever the market does, we have a guaranteed persistency bonus that gets paid starting in the 11th year, where you have a lot of carriers out there where their persistency bonus or their bonus in general is not guaranteed, and they can actually pay way less than that, and they have that ability to turn that dial down. So a lot of the lenders, a lot of the agents like the idea that we're upfront and we're providing a guarantee on those bonuses. Overloan protection rider is important just because a lot of times in terms of the exit strategy, I see agents that are taking money out of the policy to pay the loan off to the lender, and they're taking a loan. So obviously you're incurring some indebtedness to the policy. So it's important to make sure that there isn't an overloan protection rider on, and we do have that. Enhanced cash value rider. This actually has become very, very prevalent now, because when you're working with the lenders to secure a loan to pay for the policies, a lot of times, particularly in the first couple of years, there is a need for holding the lender holding collateral in terms of assets with the bank or some institution. And so we have came into and we've added this rider, an enhanced cash value rider, where we basically remove the surrender charges on our contract. And what that does is it helps prop up the high early cash value so that the client may not necessarily have to put as much into collateral that would need to be tied up to the lender. So it's a great opportunity to use this rider. Now, what I will tell you with our rider is, I know if you're familiar with other carriers that do use this rider, they levelize the compensation. We do not. We pay full comp on this on our rider, as if you didn't have the rider on there. But there is a drawback. There is a 5-year chargeback, and it's on a sliding scale. So keep that in mind, that this rider does have its privileges, but for the wrong reasons could potentially hurt your bottom line if the policy is surrendered within the first 5 years. So just keep that in mind as well too. And it is a rider, so it does impact the back end value of the contract because it is a rider cost. But again, for the right type of client, and we can, with talking with Bill and with Andrew, they can guide you on what's going to be the best course of action for you. We do have a premium deposit account. And a lot of lenders like this because they don't like to go through and have to, approve the loan every single year to pay the premiums on the contract. Some lenders will go ahead and loan the full amount out, but they need that money to be earmarked someplace. Well, we do have a premium deposit account that's currently paying 2% interest on, and it will automatically be tied to the policy and will fund the policy on a yearly basis. And guess what? That money, since it's in the premium deposit account, could be used for collateral as well too. So that can really help, with that collateral need that the lender is looking for. And then finally, we do have a supplemental coverage rider. And what this does, it allows you to blend the policy down to bring the cost down. So in anticipation, it helps with the long-term cash value buildup, but also in conjunction with the enhanced cash value rider, could get that first year cash value rider very, very high. Now, the trade-off on that is obviously compensation. Target premium is going to come down on that. But again, that's a valve that you may want to consider, particularly if you're in competition with someone, with another carrier or with Columbus, like whatever that may be. But just keep those things in mind, in this, and that's, these main things are really of importance when you're looking at our products for premium financing. I'm going to switch over to the survivorship. And the survivorship pretty much has the exact same stuff that our individual IUL product has. The only difference is, one, is that we don't have the supplemental coverage rider on there. And the reason we don't have it is because since it's a survivorship product, the cost structure of that product is low versus an individual policy because we're using 2 lives as opposed to 1. So we felt like it was not necessary to incorporate that rider into that, but we do have the enhanced cash value rider. Again, full comp payout, 5-year chargeback. But the one thing I wanted to identify, and particularly with premium financing cases and using survivorship, is if you look at the first arrow on the left that talks about one uninsurable and the other table H, I think this is where there's an opportunity for cases where somebody's not in the best of health and they're married, that you can utilize the survivorship product where somebody's uninsurable. The other one could be like standard or preferred. We don't have a restriction in terms of what the rating has to be from a premium financing standpoint. We look at the design and see what the exit strategy looks like and if it performs well enough to match that exit strategy. So in cases where you may not have people that have the best health and they're married, it may be a great opportunity where you could use our survivorship product to talk a little bit more, to use that and so forth. So, but everything else, the bonus, the overloan protection rider, everything, those things are also going to be available on our survivorship. Just to kind of give you an idea of where our crediting rates are, we do have a 0% and a 1% floor that has to be chosen at the time of issue. And our individual product and our survivorship product have the same caps and floors. So we've got the annual cap. One cap's currently at 9.5%. We have an uncapped annual point-to-point one that has 100% participation rate, but there's a spread. And we do have an uncapped monthly averaging account, and you can see there what our participation, our illustration rate is, and so forth. Fixed rate, don't use that enough. We don't use it, quite frankly, in our premium deposit account. In our premium financing cases, but that fixed rate is something to consider for non-premium financing cases. And then again, our premium deposit account, we're currently paying 2% interest on. Okay, so we're going to change gears a little bit. We've talked a little bit about premium financing in terms of our guidelines, our checklists, the features on our products to where you want to use when you're looking at us from a premium financing case standpoint. So let's talk about a particular sales strategy that I've known for a while, and we've developed some great pieces to go out there in the form of what's a survivorship standby trust. And again, this particular concept could be used for premium financing cases, but also could be used for non-premium financing cases. So I'm going to switch off out of my presentation here, and I'm going to go to our flyer here with regards to this. So this is the flyer, and again, Andrew and Bill both have this flyer, so you're more than welcome to get this. But it talks about survivorship standby trust, and what I like about this is it gets away from, it's an opportunity to get away from the traditional way of how estate planning has been done. Because a lot of times, and a lot of you that have been in the business long enough will know that estate planning, when you're buying life insurance, you got to own it in an ILED. It's, you want to keep it income tax free, you want to keep it estate tax free, and so forth, which is a good tradition, a good strategy. Don't get me wrong, but there's 3 things that you lose when you have a policy that's owned by an ILED, and that's the liquidity, use, and control of the asset. So as much as it has its benefits, it does have some cons, particularly if you're dealing with younger people that know that they're going to have an estate tax problem, but they still want to know they have accessibility to an asset. And so this is where this survivorship standby trust idea would be ideal. And this again can be used in a premium financing standpoint. So, just to kind of give you an idea of what this would look like. And we're going to take a situation where Sam and Sally, they have 3 children. Sam is several years older than Sally. So what we would do on our survivorship product is that we would insure Sam and Sally as the insureds. But on the owner is going to be Sam, because Sam, for men and ladies out there, chances are the male is going to pass away first than the female. Females, actuarially live longer than males. So we're going to put Sam as the owner on the contract. And what does this do? Well, if it was owned by an ILIT, you would be gifting premiums to the ILIT each year. And those premiums, particularly if you're doing premium financing or any other non-premium financing case, those premiums could be more than the annual gift exclusion. So now you're starting to use up some of your lifetime gift exclusion. With this particular idea where Sam is the owner, personally, there's no gifting involved. It's his policy. He's just funding the policy in a way to where he is still having the liquidity use control of the contract and still living in the benefits of what the cash value life insurance policy can do. Now, in the backdrop, what's going to happen is that the survivorship standby trust is going to be the contingent owner and primary beneficiary on this contract. So we're setting it up to where something happens to Sam, that the survivorship standby trust is going to become owner of the contract. So we've got the things in place. Well, you can say, well, Jason, you just talked about if Sam passes away, that the ownership is going to change over to the survivorship standby trust. Is that going to trigger a 3-year look back? The answer to that question is no, it does not. In the eyes of the IRS, that does not constitute as a 3-year look back. And so that's the good news. The bad news, which is not necessarily really bad news, is that if you look in this mark right here, that at his death, the fair market value of the policy will be included into his estate. So when I mean fair market value, I'm not talking about the death benefit, I'm talking about the cash value that's in the contract. And again, if you're using premium financing and there's still a loan outstanding for the premium on that contract and hasn't been taken care of, that loan is going to help with the actual fair market value of the policy, because that loan is still owed back. So there's ways to where that fair market value could be very minimal in relation to it being incorporated into the estate of the deceased. And so then if everything works out as planned, the trust is the owner, the wife is still the insured, the policy is fully funded, and it's now in mode of for estate planning standpoint. So this is where you can see this particular strategy can be a great tool to be used for your high net worth clients or people that I would say that are mass affluent. And regardless if they're using premium financing to fund the policy or not, this is just an overall great strategy that you can use to where you're still giving them the liquidity use and control of the policy, but also give them flexibility that if the state taxes are going to be probable, that they've got these things set up in place to do that. So again, Bill and Andrew have this all in a digital format for you. We are going to be creating a presentation that can be used with advisors and with clients. And I would say give it about another month, but we're really excited about that. And this concept is really something that we really think is going to take off, especially because you don't have many individuals that are in the survivorship arena. So, all right. So I know I've talked to your guys' ears off. Hopefully you're getting a lot of good information, good things to take with. And then we're going to end off with a case study. Like I mentioned to you in the beginning, this was a case study that actually this case literally just got closed yesterday. And I thought it was a good one just because there was some little work on the agent's end, there was a little work on our end, but it's all about, teamwork makes the dream work kind of conversation. And obviously that's why you utilize, Bill's group and so forth to help you with that stuff. So working in conjunction with Bill, with us, is really a great partnership to make sure that things are being done in the right way, but also it's going to benefit you and more importantly, your client. So let's just get right into it. So what I'm going to do is I'm just going to give you the framework of the case, and then I'm actually going to show you the illustrations and how they present it. So in this particular case, the insured, we were using our individual IUL product. We were using a married couple, but we insured the wife. The wife was 48 years of age, out of the state of Wisconsin. She actually came back preferred non-smoker, which was great. What was interesting, she's a non-working spouse, and that created a little bit of an issue, and we'll talk a little bit about that. The husband is older, and based on the assessment of the agent, was in fair to below average health. He actually runs a manufacturing company in Wisconsin, and so when you're looking at premium financing cases, a lot of times it's going to come down to underwriting, not just for the loan, but also for the life insurance policy, because you need that policy to perform in a way that it's creating the value of the cash that can be supported to if there's a need to pay the loan off. So the agent felt like because of his age and because of his health, that there wasn't really, it would make sense to put the husband as the insured under, even though he's the one that runs the business, he's the one that's bringing in all the income. Combined, their total net worth was just north of $7 million, but they were expecting an inheritance very soon from one of the, I don't know if it's the husband or wife's aunt that was going to bring over another close to $8 million in inheritance to their family. So that would bring up their net worth up to over $15 million. So we do take that in consideration, particularly if there's a near-term death and we can see that they are planning to get this money, that we can take those things into consideration. Husband currently has $3 million on himself, which again, that was another thing that we really needed to discuss on top of the non-working spouse. And at the end, what the agent ended up doing was applying for $7 million of coverage on the wife. So I'm going to hit on the non-working spouse and the husband's current coverage. Every carrier is different. From what I've seen, everybody's kind of in line with one another, but when it comes to non-working spouse, carriers typically are okay with providing insurance on non-working spouse, but they will only match them up to whatever the other spouse has, up to a certain amount, and then it becomes, then there's some additional guidelines that need to be met if they're asking for more, or in some cases, they may only, if it's more than what the husband has, they will only consider 50% of what the husband has to do that. So there was a couple of things that we needed to talk to the agent, and then we got involved with underwriters about that. And we came to a very good conclusion that we were comfortable with the $7 million on the non-working spouse, the wife, as long as the husband got an additional $4 million in term coverage. So we're asking that the husband at least have as much as the wife. And honestly, he needed that coverage because of his income. He did need more from a replacement standpoint. So again, it really created another, I mean, term is term, but at the end of the day, it was another, additional revenue that the agent was going to get because of them doing that. Now, in this particular situation, they didn't have to use us for the term. They could use anybody else that they want to from the term. So they elected to go term for the $4 million. We don't care, regardless if it's term or permanent coverage. As long as it's in place and it's in force, that's all we care about. So, so this created an opportunity for the agent to be able to get additional term coverage on the husband. Even though he may not necessarily be in the greatest of health, he could use other carriers that may be a little bit more liberal to give him what he needs. And that in turn allowed us to get the wife up to $7 million in coverage. And so that case was placed. So I'm going to show you a little bit about what that looked like. And hopefully you guys can see this. But what it turned out is that it says standard non-smoker. I apologize. It should say preferred on there. She actually ended up getting preferred non-smoker. And you'll see that they're solving for $7 million of coverage, and we're doing an option 2 or option B conversation with the death benefit till the end of the last premium payment, which in this case was going to be 15 years. So you can see that the dollar amount they're putting in, that's the max that they can put in without mecking the contract from a funding standpoint. You guys may be asking, okay, what was the rate on the loan? So the rate on the loan, from what I saw, I think the rate was about 3.25%, and I believe that was locked in for 5 years. So it is a good time to, now more than ever, if there's a case that work in mind, that, rates are still kind of relatively low. I know the Feds are talking about raising rates this year. I know it's probably going to happen. It's just a matter of how many times they're going to do it. But, I would kind of seize the opportunity if you have something in place that would make this work. So in this case, they're funding it for 15 years. And you'll see that after year 15, that they have north of almost $15 million in death benefit. But then in year 16, we're actually taking a loan out on the contract to pay off all these premiums that were lent to them by the lender. So now, again, you don't have to do this, but this is just talking about the exit strategies that premium financing has. You can use other assets if they're available to do that, or you can use the cash value in the contract as well too. So in this particular scenario, the agent liked doing a borrowing of the contract. So that $5.8 million loan was to service the debt. And as you can see, it does bring the death benefit down a little bit, and the indebtedness does bring the death benefit down a little bit. But because it's an index loan and there's some opportunity where if the market does better than the loan rate, that it will grow. That you'll see that at age 85, for instance, they've got net $10 million, $12 million worth of death benefit on here. So you can really see kind of how the power of how premium financing work in this particular situation, that they could use the cash value to borrow against to pay off the loan. Now, between you and I'm a little bit more conservative. I'm not necessarily a fan of borrowing against the contract because you just got out of an instrument that you were borrowing to pay the premiums. So the other idea that I talked to them about, and this is something for you as for food for thought, as opposed to doing a loan against the policy, you can do a withdrawal. So that's what I did. I showed here. Now, you had to wait one more year to do it because it was lapsing the policy if I did it the same year, but one more year, one more interest payment wasn't going to kill them. But you can see that when you do a withdrawal, yes, you lose out on the ability for that borrowed money to earn a leveraging because of how index loans work. But you're going to see that death benefit holds still. It's a withdrawal. And you can see if you actually look through this one versus the one that I just showed you, you're going to see that this death benefit is higher for like the first 15 or 20 years. And just because all of a sudden the index loan started to, because there's so much in there, is really building up that snowball of the leveraging happening on there. At some point, it does break through and it does give them more death benefit. But this is just an option that you can talk about with your clients about. We can borrow against it. We could take a withdrawal on the contract, whatever you see fit. And again, this is not set in stone. You can make a decision in terms of, that at the time that you do this. But I at least wanted to show to the agent that there's another way to do this, and it does take some heat off of them, because doing a withdrawal, you don't own any interest. So you're out of the debt game and you're not putting it more adverse risk on the client. So this is it. This is the case study. The agent was very happy about the deal, and the client was as well too. They really liked the design. They like how the outcome came out of it. And this is just one of the cases that we closed. We've got a lot more in the hopper, as a company, that we're going through the underwriting process. And so hopefully maybe if a lot of this makes sense, and you and Bill and Andrew can kind of help you with identifying opportunities. Sounds like they have some great tools for that as well too, that we could potentially be a part of that. So with that said, I am done with all that. I thank you so much for bearing with me, and hope you felt like you got fed through a fire hose, so to speak, in terms of the presentation. But I guess I'll just turn it back over to Bill and Andrew and see if anybody had any questions.
Yep, that was great, Jason. Thank you so much. I promised everyone a few questions, so let's pick out two, Andrew, and we'll fire away while we still have Jason on, and then I'm going to take about 3-4 minutes to get this wrapped up, and we'll do our giveaway. Andrew, you there?
Yes, thanks, Bill. Okay, so we have two questions. One is from John in Wisconsin. He asked, what type of collateral is acceptable? Is it tangible or non-tangible collateral? Can you touch on that real quick?
Yeah, good question, Andrew. That's really up to the lender in terms of the collateral. I know some lenders are okay with real estate being as a collateral. I have some that they're good with stocks. with bonds, any sort of assets. I remember a case, I don't know if, this is a lender I worked with at a prior company, that they were using somebody's artwork as collateral as well too. So it all really depends on what the lender feels comfortable in terms of backing the loan with. So I would say, just depending on the lender, you may want to uncover what they consider to be acceptable collateral for doing a premium financing case.
Yeah, perfect. And we have a few lenders we work with in-house that we can get that information as well. So that's no problem at all. Okay, Andrew, another one real quick.
We got one more from Carolyn. So she was touching on your question about the interest rates, that they may change, that the feds may change the rate. So her question is, what protections do the carriers or lenders put in place to protect clients from rising interest rates? It sounds like her clients are a bit more conservative.
Yep, good question. So us as a company, like, we obviously don't determine the lending rates with these particular cases, because obviously those lending rates are based on what the bank or the lender can do. Now, what I have been seeing though is that a lot of the lenders that we're working with and the agents that they're working with them, you can lock in the interest rate for a certain number of years. So it helps with that, concern where, we may be starting to see rising interest rates happening. If it holds true that we're going to move the interest rates three times this year, it obviously could have an impact. But a lot of these lenders have the ability that you can lock in a rate for X amount of years. It's just all going to depend upon like how much they're going to tack on in terms of a spread to that interest rate to see if it's affordable, and makes sense for them. So it all going to be based on the lender. You probably just want to see, I've seen 5-year lockups, I've seen 7-year lockups, I've seen 10-year lockups, but those all are going to have various interest rates that they're going to fix at. Obviously, on the 5-year, you're probably going to get a lower interest rate than, say, like a 7 or a 10-year. But if you feel like outside of 2022 and going into 2023, the interest rates might still continue to go up a little bit, then you may be comfortable in going out 7 or 10 years. But again, I would just, with the lenders that Bill has, they can walk you through that and talk a little bit about what's going to make sense for the client.
Perfect. All right, good stuff. So we have just couple minutes left. I want to get this wrapped up. Jason, we appreciate it so much. We're going to send out that thank you email. We're going to include the handouts that Jason touched on, as well as the Levinson new flyers for the mobile app and everything else that we have rolling out. So just a few things, and these are very, very important, because now you need to know where to go to find the marketing material, right? And how you're going to turn some of these prospects into your own clients and your own book of business. Okay, so jot down some notes here, because we're going to move very fast, because I want to get everyone out the door before 4:05 p.m. Eastern time, because we're a little late. So we have a premium finance section dedicated to this concept on our website. All of the marketing material is at your fingertips. We even have a consumer-facing premium finance sales software system that we'll show you on the next slide. So this is really, really cool, and it's complimentary once you're set up with us. And inside of this system, and again, it's consumer facing. You can do this through a go-to webinar, a live seminar. You can do this over the phone, whatever the case is. And it basically turns a premium finance strategy into a very easy, black and white, easy to understand layman term sale. Okay, so very innovative, very cool, and this is really neat. So this is one of our third-party companies that we work with. They have 2 different programs, and one of the premium finance programs starts, think about this for a second. We were focused on, let's say, middle to upper America, right? That at least $250,000 of income annually. This program starts at $100,000 of income or higher, and a minimum of $1 million of net worth. Okay, so that opens the door. Think of the client pool now, right? That just changed the game. So this is also available for you, and the software system is called Iul. And if you want to get set up, just let us know. And part of the software, like I said, there's videos, consumer marketing, and now you scratch your head and say, okay, well, how am I going to get this out to the masses? Right? So we're going to show you what that looks like through Agency Automator. So what I'm going to do real fast is just explain to you all, when you go into Agency Automator, think of this huge bucket of prospects, millions and millions of prospects all over the U.S., and you say, great, now how do I find a potential client that fits into this criteria? So when you enter in and click for the exact, let's say, family or insured that you would like to go after, these are the options that you can choose from, okay? Just real fast: occupation, net worth, credit score, and even income, which is going to give you a list of the perfect candidate for premium finance: name, phone number, email, address, and then you take your marketing material, let's say from Ilia or from our premium finance section on the website, and you start dripping on these people. And then you have your assistant or your admin call and follow up, and then send out personal emails to tee up the appointment. That's the 100-foot overview, big picture. Okay, let's back up for a second. This is, in my opinion, just explains everything in a nutshell. So this is, let's say you're an agent out there thinking of where's this next sale going to come from. This is where an agent is looking at his or her own book of business. Okay, so this was a real case that happened last year. One of our top agents, who, by the way, is on the Bill Levinson Experience, had an existing client. Okay, in fact, he was a doctor, male, 45, preferred health. He bought a $2 million UL plan from our agent. Okay, about 7-8 years ago. $2 million UL plan, cash value $350,000. Okay, so the agent brought up this strategy using Ilia, okay, to the consumer, to his doctor client, and said, hey, we can take your death benefit, okay, multiply it by 6, get you $12 million of death benefit. We're going to 1035 the cash value into the new UL plan and keep your premiums exactly the same. Would you be up for that, Mr. Client? He said, absolutely. Okay, sure enough, we got it done in 6 to 7 weeks. The agent commission was $350,000. My point is, who is going to say no to that deal? Same premium, okay, taking the existing death benefit, multiplying it by 6. You went from 2 million to 12, kept the premiums exactly the same. This was a slam dunk. Remember, I said in the beginning, the pro tip: think of premium finance as taking out a mortgage for your life insurance policy, right? You're not gonna buy a house without a mortgage, or most don't, okay, unless you're heavy on the cash side. But just look at it like that. It's a different strategy. Okay, real quick, our keynote speaker, Mary Reed, this is her concept. Whoops, sorry about that. Distribution solution. She is the bestseller, okay, for 5 different books, all on this concept. Okay, they're all listed bottom right side. Now, again, you have a guy, you have a girl, she will do all of the heavy lifting and make the sale for you. You just need the contact, literally. Okay, keynote speaker, April 8th at the Levinson Expo. Okay, this is another awesome training that I did with David Green. He is a premium finance pro. This was a podcast, episode number 24. It's an hour where we dive into sales strategies, all built around premium finance. We're going to include that in the thank you email. Right side is Carrie, my father. We're doing a one-on-one. This is going to be really cool. This is coming out in about a week, a one-on-one interview, and we're going to talk about how it all started, where we are today, sales ideas, what's working, what's not. It's going to be awesome. You'll see that in your inbox in the next week or so. Okay, upcoming trainings. By the way, we're done in just a minute. Upcoming trainings. This is that 115% street level commission term, instant decision. We're rolling it out on March 2nd. Write that down, March 2nd, 2 p.m. Eastern Time. We're going to have our VP on with us. That's going to be a very exciting rollout. Again, comp is great with instant decisions. And then, of course, if you want to learn more about Agency Automator, right, to build your book and turn those prospects into clients, okay, remember the database I just showed you? Every day of the week, 2 p.m. Eastern Time, we host these calls with Kevin, our programmer. Okay, so the last slide and our question of the day. So this is our Positive Tuesday quote. It's all about the little things. Achieving more in the future is great, but being more in the present is priceless. Okay, and that has to do personal, business, family, friends, right? We all know what's going on in this world around us, right? So treasure every minute. Be in the moment. Put your phones away. Okay, do whatever. Tuesday, phones are in the drawer, or living room time with the family means phones are left in the kitchen. Whatever it is, be in the moment. It's priceless. I promise you. We're going to end with our question of the day real fast. Whoever answers first and correctly wins. Make sure your little fingers are on the keyboard. The question is, I mentioned a premium finance strategy, okay, that had a lower net worth and lower required annual income. Tell me what the minimum net worth and annual income is to qualify for premium finance. Okay, I mentioned it twice. It's a newer program, and there's a lower minimum net worth requirement and minimum annual income requirement. Tell me the minimum net worth and the minimum income required to qualify for this premium finance strategy. Okay? You tell me the correct answer and you win. Andrew's going to look over the answers right now, and he's going to tell us who won the Amazon Fire 8 tablet and Distribution Solutions prospecting book. And that's Mary Reed is the author, and it's her strategy, by the way. So, Andrew, do we have a winner?
Yes, we do. Yes, we do. So first to get it right is Joseph S. Joseph S. from Illinois.
Joseph from Illinois. The answer is $1 million of net worth and a minimum of $100,000 of annual income, and you are a candidate for premium finance. Let's all have a great rest of your Thursday, great rest of the week, great selling, right? Good luck. We're here for you, and look for that thank you email. Take care, and thanks again.